All right, there we go. Everything looking good. We are live. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is 8:02 p.m. Eastern Standard Time on 11/27/2022. And as always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Somebody let me know in the comments everything's coming through loud and clear. But in the meantime, let's go ahead and get started. Hopefully everybody had a good Thanksgiving. I know I did myself. Enjoyed some time with family, some good food. Enjoyed the Friday off. Hopefully everybody had a great weekend as well. But now it's time to get back into it. And as we have been watching for weeks, I mean, honestly, like months, we're at a key inflection point in the market. You know, some places more than others, but essentially at this point in time, the Dow Jones banging its head on a bull market. A lot of other major indices or assets are banging their head on the 200 moving averages. So basically at resistance. We see gold, potential breakout, silver, potential breakout. We see DXY after a massive sell-off at support. So I think right now the most important thing to watch is, are we going to reverse the trend? Anything that's been going down, is it ready to go up? Anything going up, is it ready to go down? And obviously we don't know yet, but we're going to find out in the very near future. So let's actually, let's jump over to crypto first, just because we have like a nice, simple, basically like situation taking place. So here on the daily, which we're going to start just on the daily, and then we're actually going to go to shorter time frames. Here on the daily, we're basically hanging out at the lowest level we've been at. This is essentially the support level right here. We had the initial thrust down lower. After a massive sell-off, we overshot to the downside. We had the reaction rally consolidated. We had another thrust down. Technically, took out the low based on a close, based on a wick. And then we came back up and just hung back out at that level again. So we're basically still just consolidating at this level. The problem is while that has been taking place, we've been using up our bullish momentum, all these green histograms, and we haven't really been able to get anywhere. So the really important thing right now is to get above the 8 moving average on the daily. If we do, we likely retest the 21. If we don't, we likely retest the lows. So what does that really mean? I mean, we're pretty much caught in a tight range right now. The lows being somewhere around like 15.6 and the 21 moving average being somewhere around 17. So there's right now probably more downside risk than there is upside risk, because we know going up $500 to 17,000 versus going down, roughly $900 towards like 15,600, something like that. So we did get an exit of the bearish control zone. We did get a hard buy signal, and we started to build momentum to the upside. So there's everything set up here. Momentum in its favor, bull crosses, the beginning signs of potential for some kind of bullish retrace or a bullish move to at least build some kind of momentum. And unfortunately, we're not seeing that take place. Doesn't mean it can't take place in the future, but so far it's not. It's not working. It's not happening. So that being said, we're going to go down to the shorter time frames now, and we're going to talk about something that we were looking at in the group here over the last couple of days, and basically breaking down the shorter time frames. Now, between now, Sunday evening, and when we make do the next live stream on Wednesday, a lot could change, a lot could happen. But the most important thing is we know when the 8 and 21 are bearishly crossed to the downside, we know until they cross back to the upside, there's not even potential for a move to retest the next level of resistance or moving averages or Fibonacci's or whatever it is we're looking at. We can't build any kind of momentum until we see the green cross take place. So here we see it happen and it fails, which that's fine. Sometimes that happens. Here we see a couple times we try to cross it. We don't even get it crossed and it fails. And then we go lower. So then as soon as the 8 and 21 cross back to the upside, then we can start looking at it and saying, okay, now the 8 and 21 are green again. They've got a bull cross. Now there's potential that we're going to start chewing through some of this resistance, and then we'll get that test up to, whatever level we're looking at based on whatever time frame. In this case, we would be looking at the 200 exponential at about 17,700, and that is on the 4-hour time frame. So right around, the areas we're basically talking about, give or take. So that's the beauty of this system, is when we use these specific numbers, we use these specific moving averages, they correspond in the same way on like our 4-hour time frame as they do on the daily. And that gives us confluence. Whether or not we're looking at a certain time frame, we know that somewhere around that level our other important levels come in as well. So that being said, we see now essentially we have broken down, we pushed down, that was our, 4-hour close, which was the daily close that just happened. And now we're trying to push back up here to reclaim that level. If we do not reclaim that level, we're right back to where we were before. And we know when we're in a downtrend and then the 821 bear cross takes place, there's a high probability, higher than 50%, just because we're trading with the trend, that we're going to go down lower, at least retest the lows, if not go to a lower low. And we just put in, this is very, very important to pay attention to. We just put in a new cycle low a couple days ago. And since then, we're only up 6.2%. We're up 6.2%. The recent sell-off we had from the top right here to the bottom was 28%. So we sold off 28%. And the reaction rally, the dead cat bounce, the attempt of the bulls to, stop us from going lower has resulted in a roughly 6% move back to the upside. That is really, really bad. That's extreme weakness. Now, it doesn't mean things can't change. We can't go back up, etc. But we know if we're going to go back up, we have to get this bull cross. We have to either stop the bear cross from happening. We have to cross it back to the upside, etc. So, tonight at midnight, essentially, we'll get that cross. We'll see how it prints, and then we can watch the next few 4-hour crosses, etc. But, we know how the market looks at it. When we're above the 8 and 21 and their green cross, momentum's back to the upside. Even if we're overall in a downtrend, it gives us a much higher probability to retest the key resistance. But if we start crossing the 821 bear cross again, it's just a matter of time before we basically lose this like super thin support level that we have right here. Don't mind all this stuff right here. But I mean, if we just basically just kind of slap something in right there, let's go ahead and turn this, what's the color we'll be able to see? Yellow. This is support right here. It was support right here. We lost it. It was support through here, support here, support here. And that's where we're at right now. So if we hold this level, sure, maybe we go back up to the upside. Maybe we get a move back up. Maybe we back test, this breakdown of what was support as resistance one more time, get a slightly higher high. Maybe we break through that. We retest the 200s or a key fib level. But in order for any of that to happen, the 8 and 21 have to have a bull cross. And in order for that to happen, we have to not go lower through the support level. So in my opinion, right now, main thing to watch is shorter time frame momentum. We had the bull cross on the 15-minute. We had the bull cross on the 4-hour, or I'm sorry, the 1 hour. We had the 821 bull cross on the, 4-hour. And now all those things have reversed or are in the process of reversing. So all of our shorter time frame bullish signs, for an attempted move back to the upside or some kind of, meaningful dead cat bounce, etc., are all fading. So it's very, very important we pay attention to that. Even though we're seeing the indicator oscillators still showing some signs of strength, or, if you want to call that strength, we have sold off this much since the top, and then we bounce this much. So that's the strength, just relative speaking. This is the strength of the bears, and this is the strength of the recent move by the bulls. So am I suddenly massively bullish or anything? No, it's really not happening. So we'll have to see what happens. But when we look at this, when we see what's happening here, we see what's happening on shorter time frames and momentum. We know it's not, a nail in the coffin, but it seems very, very likely that crypto is setting up to go lower. Our weekly cross was a new low. We went sideways for 2 weeks and basically did absolutely nothing at the lows. And we know the longer time an asset class or, specific asset, whatever, hangs out at the lows, the longer it spends there, the more likely it is to go lower. Because typically what happens is you hang out at support for a while and then you break through it and then you retest the next support level. And when we retest that support level, then maybe we get an aggressive bounce. Then maybe we get, a dead cat or an internal retracement, something like that, an attempt to move back to the upside. But we've been sitting here for multiple weeks. The likelihood all of a sudden of somebody being like, wow, this is a really good deal, that we've had opportunity to purchase for 2 weeks. Like if a sale's been going on at the store on something you're interested in and you've been thinking about buying it for 2 weeks and it's still on sale and you haven't bought it yet, it's not going to suddenly motivate you to run out there and get it. Maybe if it goes on sale further, if it goes down another, 10%, maybe then you want to jump on the opportunity. But, you've had 2 weeks to buy it. If you didn't buy it already, you're probably not going to buy it. So that's how I look at, trading, investing, whatever, however you want to look at it. We're hanging out at the lows. We just put in new cycle lows. We're at those lows still. We're trying to build momentum on daily, weekly time frames, and it's not going well. I mean, that's all there is to it. We can't really sugarcoat it because there's nothing really to sugarcoat. I mean, crypto has been terrible. I mean, you know, it's supposed to outperform everything, and it's just not happening. Obviously, there's a lot of macro reasons why, but we've been talking about this level holding up, this 20,000 level, and breaking through that, and this was our crutch. This was our single candle that was, basically saving us. This was the crutch. This was the one we were gonna print out a picture of and frame it and put it on the wall with a little crutch next to it, and every night before we go to bed, we're gonna kiss our finger, touch the picture, and then pray to Bitcoin Jesus, Michael Saylor, that this doesn't break. Well, I mean, it's happening. We're 2 days away from the monthly close. Well, 2.23 days. I don't want to, or 2 days and 23 hours. I don't want to over exaggerate. We're 3 days away, roughly, from this close on the monthly. So very, very important. And we know, obviously, losing this area where we hung out at for 5 months straight and one candle propping us up, old Crutcherson saving the day. We know realistically the next target, the next area to go to is the top from 2017. This was our top right here, pushed up, rejected, and then straight down after that. And then obviously we had the one candle right here, 1 month worth of price action, a couple years ago in 2020 that propelled us to the upside. So we've already taken out half that candle. Anything could happen. Maybe we rally all the way back up here and we close this month again at 19,330. It's possible. It's definitely possible. I mean, we'll see. You got 3 days to do it. So, tell your friends you better buy that Bitcoin and save us. Because the old Crutchy McCrutcherson not looking good. The beavers are chewing at the wood, so to speak. And that is not a metaphor, okay? So that being said, seems like the target is still 13,750, 14,000, somewhere around that level. So we'll see what happens. Seems very, very likely. Momentum still all to the downside on the monthly. Stochastics powerfully angled to the downside and in the bearish control zone. 821 bear cross. I mean, again, on the monthly, the only good thing that Bitcoin has going for it, or crypto has going for it, is if you populated the 200s, we would still be above them and they would still be bullish. But obviously the asset just has not existed long enough for that to be the case. So, you could populate like a 50 or 100 or whatever and look at that for trend since we don't have the 200. But that being said, when I'm looking at this, I don't love it. There's some signs for potential going into the future, but Bitcoin is just still not looking good to me. It's not looking good at all. Ethereum still holding above the lows, which is definitely important. Not much above the lows. It seems likely that if we go down lower again, we're going to retest that $1,000 range, the bottom of the range. Again, same type of thing happening here. We had an attempt to push up. We backtested the 21, and now we're losing the 8. Seems more likely than not we're coming back down here to retest this bottom from the last two pushes. The big initial push and then the retest that put in a slightly higher low, and then we put in a lower high. Seems likely we're coming back down to that same level again, about $1,100. When we get there, it's going to really look like a descending triangle right here. We have a flat support. We have an initial dead cat bounce. We retest support. We have a pathetic pushback to the upside. We retest support. We have one more pathetic push to the upside. We retest support. Eventually, we roll long enough. We're not even bouncing anymore. We're just rolling by the end. And then what happens? The bloody waterfall. We fall off the table. Shining scene. Cue the blood. So we'll see. Weekly, again, similar situation. Below the 200s, 200 exponential has already bear crossed. 200 simple is close to a bear cross. We are above the slope line here, which is definitely, again, a step in the right direction on the daily and the weekly. But, very easily could just lose that if the bulls cannot take control. And it's not like they haven't been trying. Let's be real. And then on the monthly for Ethereum, again, slightly off the lows, which is good. But that 1070 level, I mean, that's the magic number right there. If we lose 1070 on this monthly close, we'll have a new lower low close. If it holds above it, hey, I mean, we're still above the lowest low of the cycle. So that is something. It's something. All right, so if we go to total market cap, we see we got that initial bounce, a lower high right here, a dead cat, another move back down to there, a close at the lowest level. The initial dead cat, the attempted pushback up and rejection at the cluster of moving averages. And now here we are multiple weeks again at the lows. We know likely if we fall through this level, and just for perspective, to see the total market cap chart is like almost perfect with the Bitcoin chart. I mean, the total market cap is still at the highs of 2017, 2018. if we were to sell off now, essentially that would be the equivalence. The same thing happened to Bitcoin, or I'm sorry, the same thing happened to total market cap that's happening to Bitcoin currently. We're basically at 543 billion, which is another essentially like 30% down from where we're at right now. So, I would not be surprised at all if we're about to take another like 30% down. And based on like luck or which cryptos you're invested in or not invested in is the difference between if your crypto goes down 20% instead of 30 or 90% instead of 30. So Bitcoin dominance on the weekly. So we see we're at the lowest lows. I mean, in all of history, the entire existence of Bitcoin, going back to, the age of the dinosaurs, the ice age, before the great meteor and evolution took place, this was the lowest low we ever went to on Bitcoin dominance. And then we had to bounce back up. We came down. We're hanging out. We're basically at the lowest lows on Bitcoin dominance. Now, when this happened previously, when we were at this lowest low right here, that was a massive bull market in the altcoins. Now, the altcoins are getting wrecked and they're getting absolutely destroyed. There's obviously no bull market. So why is Bitcoin at the lowest lows? It's not because the individual altcoins are worth nearly as much as they were at previous times in history, including, our recent, 70,000 top. It's because there's so many of them. There's so many of them. Imagine Bitcoin is a man. Imagine Bitcoin is a person. And it's walking around in the swamp and it's strong, it's well fed, and, it's trudging through the swamp. And then it gets a leech on it, okay? And the leech is like sucking a little bit of his blood or whatever, but it's not that big a deal. This person's still okay. They're not going to die or anything. What if they get 10 leeches on them? What if they get 20, 100? I don't know what the breaking point of like the leech to human ratio is, but I know eventually too many small things, vampires, little leeches sucking your blood, sucking your life force can really start to weigh on you. So I don't know exactly what the number is. I don't know if it's 5,000 cryptos or 10,000 cryptos or the current 20,000+ cryptos. But whatever it is, the leeches have broken Bitcoin. Because normally when we're at these levels, when we're at these lows like this, it's because the altcoins are soaring. They're ripping to the upside. They're just crushing it. Now that's not the case. Bitcoin is weak. Altcoins are as weak. Many are much weaker. And yet here we are. Bitcoin is still just being sucked dry by leeches. So regardless of what happens, maybe we break down from here. Maybe, Bitcoin dominance goes down. Maybe we break up from here. Bitcoin dominance goes up. But if we don't get the leeches off of us, who cares? If we, oh man, there's so many leeches on me. I'm so weak. Let me sit down, and just relax for a minute and have a drink. Okay. So if you sit down and relax for a minute, have a drink and pull out a power bar and eat that, and then you're like, okay, I feel great now. No, you didn't fix the problem. All the leeches are still on you. So what's going to happen going into the future? I don't know, but we're seeing a correlation, an important way to monitor what was happening in the crypto space completely break down as essentially all of the trash, just sucks Bitcoin dry like a leech. And I mean, I'm not saying that's a bad thing. Maybe Bitcoin's trash. Maybe Bitcoin is the AOL of cryptocurrencies and something amazing is coming along or it's already along. Maybe Cardano is about to just take everything over. Maybe XRP, maybe Solana's going to make a comeback. Maybe FTX is, Sam Bankman-Fried was innocent and, FBX is going to come back and everything's going to be gravy again. Anything's possible, but I mean, what's the probability of that bullshit? Bitcoin dominance, less stable coins. We see, basically Bitcoin is slightly off the lows. It's gained some strength compared to the altcoins, but basically any money that has came out of the altcoins proportionately that didn't come out of Bitcoin has just went into stable coins. So that means the market is still basically just sitting there waiting. And most of them are probably not chasing ridiculous yield right now. They're probably just sitting on the sidelines waiting for the buying opportunity, waiting for the bottom, etc. And we know that the more people are waiting, the less likely we are to see that. So we'll see what happens here. Obviously an 821 on the weekly cross back up. Bitcoin start taking back some market cap. Obviously a break back down here, a retest of the white level. If we lose that, 44.5. On to the chili cheese dog. So CHZ, it has been very strong compared to a lot of stuff lately, and now we're seeing it very weak. It reclaimed the 200s. It crossed them back to the upside, started creating this broadening wedge. It has been respecting this wedge very, very much. We're coming down towards the bottom of the wedge again, getting ready to put in like a new recent low here. Losing the 200s is obviously a big deal. So it's up to everybody to determine, hey, do I want to now buy support? Do I want to buy the 236? Do I want to buy the, descending portion of the broadening wedge support, with an attempt to move back up to the upside? I mean, that's up to you, obviously. But this is really starting to look like, hey, we push up here. We tried to reclaim the trend. It was working for a bit, and now it's not. So if we do break down from here, what is the measure move going to be? I mean, what is this pattern right here? What is it? Is it a double top? Is it a triple top? Is it, Wyckoff distribution? Whatever you want to call it. Basically what we see here is textbook either accumulation or distribution taking place. We don't know, is this reaccumulation? Is this redistribution? We don't know for sure, obviously, until it plays out. But, again, regaining the 200s is a big deal. If we lose them again, that basically shows, hey, we just tried our best. The bulls came in. They tried to move this back to the upside. And, it worked for a little bit, but then eventually it failed. So that just usually says, hey, that was in fact distribution, and we're getting ready for another leg down, probably to retest the lows. Solana next, looking very, very weak. It had a little bounce off of the lows here, came back up, tried to reclaim the 8, and now it's losing it again. Looks like it's headed back down here to retest the lows at about 12 bucks. We see the bull cross, hard buy signal. We see all the green histograms moving to the upside, and yet we could barely even reclaim the 8, couldn't even retest the 21, and now it looks like it's rolling back over, headed back to the downside. Crypto is very, very weak right now. Link on the daily, basically retesting the 200 simple. 821 bull cross took place on the daily. Back tested the 200, come back down. It looks like we're getting ready to lose that level again. Link looks a little better. We would expect to bang our head, consolidate and try to push up here again. We just did it though, so maybe it's done. I mean, this thing literally, again, hang out at the lows, back testing. If we put in another lower high right here, I mean, my bet's on us retesting the lows, 575. All right, Avalanche is next. Again, same thing basically. Looks a little stronger here, at least like the positive move up on the. Actually, I don't know what's going on right here, because this chart doesn't look to be live. There's no like countdown. Polka dot on the daily, retesting that 786 at the lowest low of the entire trend. We talked about this potential retesting resistance and the potential for a breakout and move to the upside. Obviously, you guys know how I felt about that. Did not seem likely to me. We got clearly rejected exactly at that level. So, I mean, anybody can draw. If you give your kid a crayon, and this, like, point to the screen, which I wouldn't recommend this. I don't think you should draw on your screen with crayons. But let's just say, hypothetically, you give them a dry erase marker and you say, hey, go draw a line, on the top here. Like, it's pretty clear. Anybody could freaking see that. Anybody could see the support on the bottom here as well. So if this thing decides, hey, we retest the top, we retest the top, we retest the top, we retest the bottom, we retest the bottom, we retest the bottom multiple times. I mean, are we getting ready to retest the bottom again? Because, I mean, this is going to look so nasty if it does. And maybe you have it drawn a little bit different than I do. We don't know when it's going to get down there. Let's say it just goes down in one candle right now. One of these guys. Let's say it just does one of these and just goes straight down to support. I mean, right now, we're talking about like $2.40. Is Polka dot going to $2.40? I mean, I don't know, but I'd be careful. Matic. So Matic was one of the stronger ones as well. Tried to reclaim this level after the initial breakdown. Backtest rejection, 821 bear cross. Trying to flip the 200s back to the upside. Again, as long as we're between the 200 simple and 200 exponential, or the 382 and the 0.5, I look at that as, the ceiling, and that is the floor. So 73 cents or 95 cents. Let's see what happens. If we lose this level, we're talking about that 53 cents. If we reclaim it and start pushing back to the upside, it's going to be a struggle. It's going to be a grind, but we're talking about $1.23. So, basically, I mean, about 40 cents, 30 cents to the downside, 40 cents to the upside. Big moves getting ready to happen in some of these cryptos. XRP. So it reclaimed the 200 simple, reclaimed the 200 exponential for a bit, tried crossing to the upside, couldn't quite do it. Now, again, 821 crossing back to the downside. Any momentum these things are trying to build up, they're losing. This one has an ascending support that's been pretty heavily respected. So it seems like it's going back to 34 cents. So, and we know XRP is dead money. So, ADA, Cardano, at the lows, the lowest lows ever in all of existence of this entire sell-off. Since the top. You're like, that's kind of exaggerating. It's not the lowest low ever. Well, it's the lowest low most people have ever seen. So it's only down 90% right now. That's not bad. That's not bad. I know a lot of people are like, oh, you're so mean to Cardano, and why are you giving Charles a hard time? And these are good cryptos and the staking. Well, look how all of that aged, because, Charles is a great guy and he's working on Goguen. And yep, that's going real, real well. And I'm glad that he can, jump on live stream and, continue to market his trash crypto that's completely melting down. So congratulations, Charles. You are officially trash. So BNB is next. So it did have a little pushback up here, trying to reclaim the 200s. I've been warning you guys about BNB for a while now. Obviously, the key areas to watch are, maintaining above the 200s is a big deal. Doesn't look great right now. We had this little uptrend going on here. We even pushed back up and put in a slightly higher high right here, which is cool. That was obviously corresponding with CZ bending over Sam Bankman-Fried and, taking part in some involuntary actions with his, secret backdoor, so to speak. Sorry, I have to speak in code, but let's just say that, CZ won the battle and also the war. But can CZ continue to win the war against reality? Because it looks now like a high, a low, a potential lower high, and then again, it looks like we're going to come back down here and retest the lows again. So y'all ready for Binance to lose $100? I shouldn't. Let's not exaggerate. Are you guys ready for BNB coin to lose $85? 33%? And that's just retesting the neckline, at which point in time we basically have, call it what you want to call it, a double top, Adam and Eve potential situation. And, you guys know, I've said it a million times. If you came back to, no, I'm sorry. If I came back from the future and, came up to me and was like, hey, look, shit got crazy. And I'm like, what do you mean? You're like, Terminators? Or, you're like, no, with crypto, I mean. You're like, you won't believe what BNB's trading at. If you were like $40, right? That's crazy. I'd be like, I'm not even surprised a little bit at that. But also, how are you time traveling? So, I mean, $40, BNB? That's my prediction. Maybe, maybe not. I don't know. See what happens. So there's a couple of important things going on here. So yeah, let's just grind on down. We'll start with TNX and then we'll work our way through. So TNX on the daily. So obviously 821 bear cross. We're in the middle of a retracement. We're back testing some key levels. So we have this previous swing right here. We also have that 382 internal retrace fib right here. So we're talking about 3.58% to 3.50%, somewhere around there. For our next target to downside if we see continuation. We're looking for signs of exhaustion at some point in time. U.S. oil is next. So on the daily, U.S. oil put in a new low. Obviously, I've been talking about this for a while. You guys know, basically, when we failed to retest the 200 right here, 200 simple, and we flipped the bear trend, officially confirmed on oil right here. So, hey, how do you know when to stop longing the dips and selling and start selling the rips? Well, I mean, that's it. Congratulations. Bear market. Oil's in a bear market. I mean, no big surprise. Obviously, we called the top, literally within a couple of dollars. Not a big surprise there. Obviously, Kathy Wood looks like a fool saying that oil was going to be $8 a barrel or $12 a barrel or whatever. And we were all going to be flying around in cars. And okay, Kathy, okay. That's why you just aged 20 years in the last 3 years. I mean, she's covered in liver spots right now. I don't even think she believes her own lies anymore. I mean, it's pathetic. But that being said, U.S. oil, new lowest low, new cycle lows. The lowest low we've been in, this whole run, we're at the lowest low since the pullback started. And we're now officially back at June 2021 levels. So keep this in mind, okay? We were in the energy trade before, it was the cool thing to do. And then remember what happened, okay? The stock market started crashing. Crypto started crashing. We were out of all that stuff at the beginning of the year. And we were already positioned in energy and some of these other key players. Energy went on an epic bull run from there. We get out of energy. Everybody else that got into energy this whole entire year and half of last year is now underwater. That is why it's so damn important to have measurable levels, whatever, some kind of trading plan, some kind of way to determine, hey, this is a bear market, this is a bull market, et cetera, et cetera. Because, I mean, can you even imagine So ridiculous. All the smart money was late to the trade and then rides it up, and then now we're lower than when we started. So where do I think oil's going? I mean, I've said it a million times. You guys know we have all our targets in place. Low 60s likely. But I mean, hey, when we were calling for low 60s back here, it sounded crazy. Everybody else was calling for 200 or 500 or 1,000 or, whatever. And, what seems more likely now? Does 200 seem more likely? Does all-time highs on oil, 150, seem more likely? Or does it seem like we're headed to $60? Just saying. So we'll see what happens. Still very, very bullish long-term on energy, but, what is this? An A down, a B retracement, getting ready for our C down. We back tested the 382 perfectly. We're headed much lower. We can even put in a fib extension from our low to our high and see where it points to. 1.618 is at 66.92. The macro 236 is at 60.21. So we'll see what happens. Oh no, that's not the macro 236. Sorry, this is the 382. So that's what we're looking for, is the A, the B, the C to the 382 to the low 60s, and then we'll go from there. And also, it is sort of strange, is it not, that Nancy Pelosi is an amazing stock picker, and also Joe Biden is, a phenomenal oil futures trader with the Strategic Petroleum Reserve. Oh God! We should just make a movie, but instead of having it be about something, it can just be about what's happening right now in the real world, because it's equally unbelievable. It would definitely be a thriller, for sure, a thriller. So volatility next. Volatility is completely melting down. So we're hitting our support now. We have this ascending blue support right here. We made it. We did it. We're there. We also have our previous swing low right here in yellow. So and then on top of that, we have the macro heart line of the entire channel. Obviously the top and the bottom being key levels. So we're right smack in the middle of that. And we're also at support based on the ascending triangle, or ascending, whatever you want to call it, little consolidation pattern, as well as our previous swing low. So one of two things going to happen right now. We're at a level. This is where I like to get juicy with my trades, because the way I look at it is, okay, if we break down from right here, we're going to go lower, because we took out that swing low, and now we have a high, a low, a lower high. We put in a lower low. So, continuation likely. And then the opposite here, if we break down, obviously, the opposite here, we're at support right now. So we can run a tight stop loss. If we break down, we don't want to be in that trade. And if we do find support at the support level, which is where we're at right now, we would expect at least a back test of the 200s, a back test of this ascending green/white support. There's lots of reasons why we would expect to push back up, potentially even all the way back up here to 33. So, when we look at the initial potential move, on volatility right now, and historically, I mean, when we're at 1920, that's the time to buy. That's when the stock market is topping and the VIX is bottoming, because nobody's protecting themselves against downside risk. Everyone thinks we're going higher, and then lo and behold. So that being said, we're talking about 25% move to the upside with about an 8.7% stop loss, something like that. So it's roughly 3-to-1. It's a little tight. I mean, you could finagle it. I just kind of threw that stop loss out there, roughly. You could tighten it up if you had to. But potentially coming back up to the top of the range right here. Every time we tested the blue, last 2 times we got a nice bounce. Every time we tested the red, last few times we got a nice sell-off. So, potential for a 25 to 54% move to the upside on volatility. And obviously there's plenty of ways to play volatility. So Dow Jones has been very, very strong. We closed a new high right here. That's very important. We're back above the 200 exponential, which has a positive slope. We're back above the 200 simple, which still has a flat slope or negative slope technically for now. 200 exponential is about to cross above it. We had a pretty epic run right here. We had a pretty epic run. So the real question is right now, and we talked about why this run happened. We did the breakdown of the individual stocks inside the Dow. We talked about the earnings. We talked about how they're not inflation adjusted. We talked about all that different stuff, controlling costs, multiples, all the different important things. Which of those individual top 10 stocks by, weight in the Dow Jones were looking good, which ones were looking bad, which ones were weighing it down, et cetera, et cetera. Because we see the Dow Jones substantially overperforming. And that's not supposed to be happening. Remember, it was supposed to be the Russell. It was supposed to be tech that were overperforming. Because everybody who says the small cap, and tech and, the little guys, they're the ones who lead us out of the bear market. They're the ones who start the next bull market. Well, that's obviously not the case. What is the Dow Jones? The Dow Jones is the industrials and medical, and it's the safety, portion. It doesn't have all that extra tech in there. It doesn't have all that unprofitable shit in there, from the Russell, those small caps. So that being said, we're at key levels. This is a key support level right here. It's acting now as a key resistance level. We're 8% off of 7.5% off of new all-time highs on the Dow Jones. So, I'm not going to sit here and be bearish on the Dow Jones right now, but I'm just saying, now, if there was ever a time to be careful, this is it. On the weekly, looks great. We bounced to 200 exponential. We V-bottomed. The only thing we're missing right here is, this big wick. This is a V-bottom, and it looks at what happened last time. We headed to highs after that, so I'm not going to rule it out. Building up bullish momentum. The slope line has just flipped blue officially. Bunch of green histograms above the zero line. Hard buy signal. 821 bull cross above the 200s. Both are blue. Just took out the previous swing high. Look, if you ask me my honest opinion, do I think the Dow Jones is going to, starting a new bull run? No. You ask me my honest opinion, do I think the Dow Jones could hit new all-time highs by end of year or beginning of next year? Yeah, I do. I definitely think it could happen. It could happen. And look, again, do I think the Dow Jones should go to new all-time highs? Well, it doesn't matter. We talked about the valuations. We looked at the numbers. A bunch of these companies are doing phenomenally well with record profits. There's a strong argument that actually the indicator oscillators are correct. And they're, regardless of what we think or how we feel, that we should trust what works. And that's exactly what it is. We trust our system. So monthly Dow Jones about to close. We got 3 days left on this thing. The 821 has crossed back to the upside. Now it is 100% possible this monthly candle could just get a massive rejection, sell back down below the 8 and 21, fail to cross the bull, 821 monthly bull cross back to the upside. And then it just looks like a disgusting rejection, which then points us back down to retesting the lows and likely lower lows. That is 100% a possibility. And I would not be surprised at all. But, look, there's 3 days for that to happen. And it doesn't seem nearly as likely that it's going to happen now as it did, maybe a couple weeks ago. So that being said, Dow Jones, there's a strong case that, this thing could do okay. Now, what does that mean for everything else? SPY at resistance at the 200s. The back test can't get above them for now. Meanwhile, Dow Jones completely overperforming. Weekly looks okay. We bounced to 200 exponential and simple. We're trying to reclaim the 821, the bull cross. The last 2 times it happened, we got real close, and then it failed. Is that going to happen again? 2 days away. We'll find out. We did bounce off of some very strong bullish divergence. So it's not crazy to think, that, hey, that was it. That was the bottom, and we're going higher. 821 on the monthly. Again, we're almost reclaiming it. Same thing could happen. We could easily get rejected and don't reclaim it. We could easily push up here, close, and then get rejected next month. And, it would bull cross and then bear cross right away again. Or, maybe we're going to new all-time highs. But it is worth noting that from where we're at right now to all-time highs on the S&P, still down 19%. Dow Jones is 7.5%. So we're seeing a massive overperformance in the Dow Jones. And part of that is concentration. And what do I mean by concentration? If there's a bunch of money and everything's doing good, the money goes everywhere. As things get riskier, as things are selling off, people stop going out the risk curve. They stop buying crazy cryptos or unprofitable companies or whatever. They tighten their straps a little bit, and they bet on stuff with actual positive earnings, good companies with dividends and long histories and, lower valuations, etc. Well, not in all cases, but often. So we'll see what happens. We will see what happens. The Qs, but I guess my point is that it's easier for one index to run in a situation like this than it is for all 4 of them. And we see that demonstrated clearly because the Dow Jones is strong, but the Russell is okay, the S&P is okay, and the Triple Q or NASDAQ is total trash. So we see we didn't even get close to the 200s right here. Very weak on all time frames. All time frames. Tech looked weak on all time frames. barely hang on to the 200s on the weekly. We did see that bullish divergence and got almost no move off of it. And then if we go to the monthly, 821 still very much bear crossed. Back testing the 8 right now. Seems likely that we're going lower. We're in the bearish control zone. All red histograms, red slope line below the 0 line. Does not look good to me. IWM. So Russell, same thing. This basically looks almost exactly like the S&P. So XLE back tested, put in that slightly higher high, consolidating at these levels while the histogram, comes down, while the stochastics come down. The truth is, if all XLE has to do is just go sideways here, and then it's going to go higher. But if it hangs out here long enough and then, the floor drops out on it, everything changes. So right now, it looks like we're setting up for, basically a bullish consolidation. Now, the reason I don't think this is a bullish consolidation that we're going to actually see play out is, we're basically just kind of hanging out right here, and it doesn't look particularly strong to me. So if we retest the lows again and this breaks, be prepared for a big leg down. If we don't and we hang out here for a couple more days or, a couple weeks, there's no reason, energy can't come down while the XLE goes higher. Because, it's really just companies, energy companies. Okay, so we're going to take a look at this really quick. This is something that I have been working on. Obviously, inflation is all anybody gives a shit about anymore. And by anybody, I mean the only people that matter, which is JPZ at the Federal Reserve. Jerome Powell, obviously, all he talks about is inflation and employment. And inflation is high and unemployment is low or employment is high. So, who cares? So what I've been working on here is the TJD CPI inflation. And essentially all it does is takes the inflation data and then puts a slope line, like moving average, on it. So we can see what's going on. Now, obviously, this is calculated monthly because that's when we get our inflation data, is once a month. So it's really only useful on the monthly time frame. Have the Fed funds rate here at 2%, Fed target rate at 2% rather. Obviously, the let me zoom back out here. Actually, yeah, we'll go back in here. So there's some other options on here as well for like some cool stuff. So the main, simple. That's what we're going for. Is simple, just simple and easy. We want to be able to slap this on charts. We want to be able to look at different asset classes or indices or anything else that has a ticker on TradingView and be able to tell, hey, is there a correlation between inflation? Have there been periods in the Have there been periods in the past where inflation raged and also this asset raged? Did we see as inflation increased, this asset's value decreased, et cetera, et cetera? So obviously when it's green, we're going up. When it's red, we're going down. So it's based on the slope of the inflation data. So if we just kind of like look at this area right here, this is what we're focusing on. So this was the bottom of inflation, which was May of 2020. Okay, so just think about that. What was going on right there? That was obviously basically at 0 down here. And then since then, we've seen inflation get all the way up here at like, 9%. So, obviously this is green because we've been in a massive uptrend. And we can see the slope of our moving average right here, which I have set to 21 right now. You can obviously change it in the options. Tells us obviously inflation is still going to the upside. So now here we're seeing what looks like an actual peak on inflation, and we're seeing the slope line on the inflation has basically gone flat. It's negative. It's red now. So this is telling us, hey, inflation likely has peaked or is close to peaking or, has a short-term peak at least. Doesn't mean we don't go higher. Doesn't mean we don't consolidate and then, it gets out of control again. But, very important. And then there's couple other little cool things on here. So I put a histogram on here as well, so we can determine basically, is there inflation or deflation? So, as long as we're above 0, obviously, there's no inflation. If we're below 0, there's technically like deflation going on, or disinflation, however you want to term it. And then obviously you can see the histogram lines up with the slope line as well for the actual inflation data, not the slope itself. So as the inflation data is going up, we're getting the green histograms. As it's going down, we're getting the red histograms. So it's a little easier on the eyes for people. If the Fed should change its, target rate in the future, we can alter that. We can put it at different levels, whatever. We can look at this chart, you know, going back to like the 1950s, whatever, however you want to do this. We look at this going back to like roughly, let's just say 1949. We look at this going back to 1949. We see how many times did we have deflation. We had one period here, one period here, one here, and a tad bit right there. You know, how many times was, or what percentage of the time was the Fed above their target rate? And obviously the target rate changes along the way, but 2% target rate has been set now for quite some time. So any of this data basically since like the ridiculous inflation top of like the 80s or whatever, we can see essentially the Fed has like set inflation at 2%. So we see for a while they were doing fine, keeping it above. Sometimes it would drop below. You know, they were definitely doing a great job at eroding the American people's purchasing power, job, you know, success, silent tax, etc. And then obviously we went through a deflationary period right here after the 2008 global financial crisis. And then from then, the majority of the time after that, we have spent under the 2% target. So the Fed has been unable to reach their inflation targets. So you guys know, obviously, I was talking about, you know, Jay Powell hanging out at the podium, you know, with his pants down, enjoying that fellation, okay, the inflation fellation. Well, you know, did that play out exactly as I was said? He's like, oh, I hate inflation. It's so bad. We're going to do everything we can to bring inflation down. So we're going to raise by 75 basis points sometime way in the future. And then we're going to do it some more. And we're going to do it more after that. And we're just going to lick this inflation. I mean, do you think that maybe Jay Powell could have raised 1% or 2% or 5% if you really want to get rid of inflation? Or do you think maybe this was like all part of the plan? Not some like big, massive conspiracy, but, you know, we talked about it. You know, get your anniversary once a year. You're married for a while. It's not as spicy anymore. You know, people are less willing to do nice things for each other. So, you know, on your birthday, you know, you get offered up that nice little fillet. You're going to sit back and you're going to enjoy it for a while. You know what I mean? You're not going to rush to get it over with. No. You're going to enjoy it. That's exactly what they're doing. They're enjoying the inflation. So that being said, we got a new indicator. Should be published pretty soon. This one's going to be exclusive for group members, as I do appreciate your guys' support, obviously. So if you're already a group member, you'll get access to this. If you're not, you can join the group and get access to it. But yeah, so pretty useful, pretty cool. I like it overall. You know, being able to turn off the histograms, I think is kind of a nice feature depending on what you're looking for. But now, that being said, now that you guys know, you know, basically how it works, etc., whatever, you're like, oh yeah, how it works. It's not like super complicated or anything, but, you know, could potentially be useful. I don't know. So I have the Dow Jones on here, and then I have gold on here in the blue line. So Dow Jones is like this little orange chunk, and then this is gold right here. So we could see basically like, you know, at what point in time, you know, at key times in history, what were markets doing? What was gold doing? What was the stock market doing? So, you know, obviously the main thing that everybody's always talking about is, you know, what took place from the 60s to the 80s when we had like the massive inflation situation. So we saw basically three tops along the way. And we see the first top in April of 1970. I almost said 2070. Jesus. In 1970. And we see that was the actual bottom in the Dow Jones, which was also a retest of the 200 exponential and simple. Look at that crazy confluence. Top in inflation, bottom in the Dow Jones. Okay, let's keep going and see if we see any other weird stuff. Okay, top in inflation right here. Oh, look, bottom in the Dow Jones. And what's gold doing during this time? Gold has a pretty epic run up on this initial one, comes back down, retest support, has a pretty epic run up on the next, you know, inflation ramping up, has a blow off top right here, comes back down, corresponds almost perfectly. So we see during this period right here of inflation, this crazy inflation that was going on, we could see, you know, and then obviously look at gold just goes absolutely parabolic during the third spike of inflation. So we see an initial spike of inflation, and then it comes down. We see a second bigger spike of inflation. It comes down. Each time puts in a higher low, and then a massive spike of inflation. And, you know, that's what everybody's always talking about, you know, Paul Volcker and blah, blah, blah. And they got to make sure it doesn't happen again. And we're keeping at it. We're keeping at it. So, I mean, we see what happens with gold, and you're like, well, obviously gold's an inflation hedge. Sure, okay. And you're like, well, obviously, you know, the Dow Jones couldn't get to new highs because of the inflation. But most importantly, every time we saw the peak in the Dow Jones, or I'm sorry, the trough in the peak in inflation was the trough in the Dow Jones almost perfectly. And then we see here again a peak in inflation, the trough almost perfectly in the Dow Jones, the red lines being the tops. the green lines being the tops of the Dow Jones. And then again, third time right here, almost perfectly. And then from then, consolidate. This was basically a 12-year period that played out. 66 to 82, 16-year period that played out. 66 to 82, we go sideways, smashing our head right here. And inflation keeps going higher and higher as the Dow Jones goes sideways. And then eventually when inflation finally goes down, then the Dow Jones, takes off parabolic after that. Just absolutely parabolic after that. So then if we look at our most recent data, and this is cool too doing this because you can actually see all the people that are talking trash about whatever asset, how they perform compared to each other. You could pick a point in time and I talk about statistics all the time and how you can make them say whatever you want. Okay, look, if we start our chart right here in 1950 and we look at the performance of gold from 1950 compared to the performance of the Dow Jones is up 12,000%. Gold's only up 4,900%, 4,900. That's so pathetic. It's such trash. Oh, wait, look. All we did was switch forward a couple of years. Now it's 1971. And now look, gold and Dow Jones have performed almost equally. Gold had a little more spiky action going on here, but they've performed literally almost the same. They're both up 4,000% roughly. And then you're like, oh, what if, you bought it just some average time in the 90s? Okay, Dow Jones has overperformed gold. And you're like, well, what if you bought, in 1994? Oh, look, now gold is better than Dow Jones. So, when you hear people saying, oh, gold's trash because it couldn't even keep up with inflation and it's not saving your purchasing power and da-da-da, it's all subjective. And when we're talking about an asset that has documented usage for multiple thousands of years as actual money, I would say probably don't worry about if 5 or 20 years goes by where your gold doesn't look like it's making you money or preserving your purchasing power. Because, it's all subjective. It's all if I was like, oh, the Dow Jones is such shit. It's only up 400%, since 97. What total trash. You're like, but gold's up 404.73%. It's outperforming the Dow by almost 0.5%. That's amazing. So just keep in mind, there's a lot of this stuff subjective. I should have this indicator available pretty soon here. Just working out a couple last little things on it. But pretty nice so far. I've been messing around with it. Obviously we can see, as of right now, we'll see what happens. I'm looking for correlation, etc., between, when we're potentially topping. Obviously, we see the Dow Jones topped right here, but inflation was still ramping up on its way. We see that inflation officially confirmed into a bull trend somewhere around February of 2021. We know what really caused the inflation started back here, in March 2020, because basically the V bottom was the, bailout shotgun, fiscal and monetary policy. So if we see this is where the damage was done, and then this is where, we topped, and we look back here and say, well, this is where the damage was done, and then, this is potentially where inflation is topping. Well, how long did it take for the inflation to come down the pipeline, and how long did it last for afterwards? So if we're talking about from March 2020 until basically, we just technically peaked based on the slope, October 2022, and we're talking about 2.5 years it took for this inflation. Now, the whole time the Fed was obviously increasing the balance sheet and stuff like that. So there's definitely some other things to pay attention to as well. But, worth a look, in my opinion. Hey, somebody in the chat give me a thumbs up that everything's coming through loud and clear. My end's kind of acting a little funny. And YouTube took forever to actually start the stream today. All right, so let's take a look at the dollar now. So we talked about this lately. Obviously, we've been talking about how things are at resistance or support. So we see what happened last time when we got down here on the Dow Jones and the S&P and all these things. They put in bullish divergence and then they went absolutely parabolic. And part of that was predicated on the dollar selling off because the dollar strength is what was causing weakness in all of these other assets. So right now what we're seeing is we had a massive sell-off or retracement of this amazing bull run back to the 200s. And now here we are, we're in the bearish control zone. The knife is back above both stochastics. The stochastics are basically touching, very close to crossing and very close to a hard buy signal coming out of the bearish control zone. At the 200s with one drive down here and then a lesser drive or a higher low. And then we see one drive down here and a greater drive or a lower low. So we see bullish divergence has officially developed on the DXY, on the dollar, and everything's starting to say, hey, we're about to get a push back up. So what happens? Well, first we retest the 21. That's going to look like what? A double top basically. So then we're going to have a W, double bottom. And then if we break through the 21 and we break through the neckline of the W, the measure move back to the upside would be a back test of our previous support turned potentially resistance. So a move back up to 110 seems likely right now. Seems likely. And if that corresponds with what's been taking place in the markets, that could be extreme weakness in the markets. Now, there is a possibility, and of course, no one's talking about this because, there's no original thought on planet Earth anymore. Everybody just regurgitates all the same stuff that everybody else says. But thank you very much, Jay Hoff. I appreciate that. Super quiet in here today. Everybody must be hungover from the weekend. There's an important thing that took place, and I'm going to try to keep this all together and brief. But it's very, very important, okay? The dollar, the DXY, got strong because people wanted to flee to safety, basically, and flee to cash. So they flee to cash by going into dollars. They flee to safety by going into, fiat, essentially. So the best fiat, quote unquote, aka, because it's the reserve currency, is the dollar. So people run to the safest form of cash. So some people went to euros, some people went to British pounds, some people went to whatever their currency is. Other people, even though they didn't live in the United States, went to dollars because of, the safety factors, etc. So that being said, that caused the DXY to be strong. But at the same time that was taking place, the markets were selling off. Crypto was selling off. The U.S. stock market was selling off. Real estate has, to some degree, come back down, etc. So now we have basically, right up until here, basically, right up until, the last couple weeks, a couple weeks ago, the dollar had been gone parabolic, very, very strong. So all of these people that now want to go to dollars can't go to dollars because they're too expensive. It's come too far. And then all the people that want to buy into the stock market have more buying power because the stock market has come down. So if you live in the United States, this doesn't affect you as much. I mean, sure, the stock market comes down. Sure, you can buy more imports from other countries, but it doesn't affect like your daily life. Like you're not going to the store and getting like your groceries cheaper or anything like that because the dollar's strong. It's only when you're buying things outside of your own country denominated in that currency, etc. So the whole point of that basic explanation that you guys already all know, and just a little recap right there, was to basically get at the fact that once the DXY started selling off, once it became weak, we had a situation, an anomaly basically take place where we now had the stock market at, record lows, new cycle lows. The United States assets were really, really low. And then suddenly the dollar starts getting weak as well. So now if you live outside of the United States, and think about if your currency is denominated in British pounds, okay? You've been getting wrecked. You've been getting your, booty hole waxed, and not in a good way, left and right, okay? Or Europe, whoever. Insert X country right here this whole time. But now the stock prices in the USA are low, and the exchange rate relative to what it's been recently, and again, all relative. I'm not saying stock prices are low compared to like history, but compared to recently. So stock price has been coming down for a year. DXY was strong, and now the DXY has come down for a year. So now if you take that euro and you go into dollars, you want to buy US stocks or whatever, suddenly you're talking about a whole different scene. Because now when you exchange into dollars, you get a boost because the dollar is weak, the DXY is weak. And then you buy into stocks that are super cheap because they've been getting wrecked. Many tech stocks down massively, Dow Jones, etc. So in the same way that people were fleeing to the DXY for safety because they wanted to be in cash and they wanted to be in American cash, now we could potentially see people fleeing again back into American assets, United States assets. So there's a good possibility, and I'm not saying this is going to happen, okay, but this is a decent thesis at least to why specifically the Dow Jones is so strong right now, because a lot of this foreign money is coming back into the United States while the dollar is weak, while the DXY is weak, while the exchange rate is strong, and the stocks are at lower prices. So that money coming back into the United States concentrated in a single index or asset class, like for instance, the Dow Jones, industrials, healthcare, all that good stuff, consumer staples, like that money coming in, it could be less than came out or less than was in before. Let's just, for simplicity's sake, let's say you have $100 invested and then you pull it out and go into cash and you have that $100. Everything goes down, the exchange rates get all funky and change around, and now you go to reinvest that $100. Let's say only 50 comes back in. But instead of that $100 that came out of all the different markets, cryptos and the Dow Jones and the S&P and the Qs, instead of coming out of all those and then going back into all those, that $100 comes out, only 50 comes back in, half as much. No way we go to new all-time highs, but that 50 just goes into a higher concentration into the Dow Jones. Suddenly Dow Jones is at new all-time highs and other stuff's getting absolutely wrecked. The DXY is technically weak while, American stocks are, demonstratively strong. So don't rule out the possibility of some weird situations taking place that are difficult to explain. I mean, depending on who you are. I thought I did a phenomenal job, but, anyway, so that's my macro strategy on potentially what could happen. If again, time traveler comes back and says, oh my God, you're never going to believe it. This sector, all absolutely wrecked Dow Jones new all-time highs. And I'm like, yeah, I can see it. And you're like, that doesn't even make sense. And I'm like, well, actually, if I share my hypothesis with you, there's a strong case that we could see the Dow Jones at new all-time highs before end of year. Actually. So that being said, let's take a look at the trash tech stocks. Speaking of trash tech, Tesla reclaiming the blue 236. You guys know how I feel. We hang out here long enough. I expect us to go down to the 382. We did print some bullish divergence right here between this initial push and this one here. Not really between these two right there. So maybe we get a push back up here to like 210. Honestly, next big push back up on Tesla, I'm looking to go short. So Microsoft played out the majority of the move. It was like 24% to retest the 200s. We're probably 2/3 the way there. Apple still expecting further downside. If we don't close back above the 200 exponential and simple, I still don't feel threatened in this situation. Seems more likely than not that we're going lower. And the short target is still in place for the remainder of the trade, 31%, and down here at 116. So Google, we got the initial bounce off the 0.5, the back test of the 382, the 821 have a bull cross right now. We're severely underperforming and haven't even come close to the 200 exponential and simple. We do see momentum starting to pick up. It wouldn't be crazy if like Google just shot up to the 236 at like 115. We saw like a 15, almost 20% move, but I wouldn't count on it either. And the truth is we're at resistance. So if you have a bias in one direction or the other, especially if it's to the downside, you're basically at a great spot to take a trade. Obviously not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. So Meta getting ready to launch the metaverse. Obviously, that's going to be a game changer. I would expect this to go absolutely parabolic because honestly, the truth is people love, old systems that look like video games from like the 1970s Atari. And people don't want limbs anyway, at least not legs, not in, the digital future world that is the metaverse. So, if you haven't picked up your plots of land, better get them before they make more. They're not making any more of them. Like that old Superman quote. But it's like the opposite though, because all these cryptos are fake trash scams that just print up like trillions of whatever. So yeah, Meta, it's trying to close the gap. There's still a little potential to move up here to like 125, another $10 still upside. It's struggling just across the 821 bullish though. We'll see. I wonder if the bottom's getting ready to fall out on this. Speaking of bottoms falling out, is anybody else watching crypto? Could I possibly have gotten on here and predicted what was going to happen any better? The bloody waterfall, the 4-hour 821 bear cross. Look, the 8-ball has served us well. I'm just saying. Okay, so Amazon on the daily, hanging out at the lows. We'll see what's going to happen here. I would imagine, honestly, like, it sounds like Black Friday stuff hasn't been particularly good, but it's really all about Cyber Monday now anyway. So, we'll see how that goes for old Amazon, but it seems likely that they're actually going to print a negative year on earnings. So, I don't know. That's not going to be good for their stock price. How does that translate though to what's happening here? I don't know. Maybe we come back down here to the 886, retest the lows at $89, fill the gap, and then actually probably just go lower to our target in the low 80s, high 70s. Magma. Liquid lava. Molten rocks. What a good word. Magma. All right, so gold, same thing basically. Gold is at resistance. So now we're seeing a direct correlation between gold, silver, metals basically, and the stock market. So that makes sense, right? Because if inflation's going up and then the hedge is the gold, and then the stocks are going to go up too because the inflation is coming down. So, I mean, explain it to me. If you ask me what's happening here, what did we see weakness in? DXY. What did we see strength in? Everything else. What are we still seeing weakness in? Kind of the DXY, but definitely the TNX. What are we still seeing strength in? Everything else, except for crypto. Crypto is obviously just trash. But I mean, look, I called it out exactly, didn't I? Okay, what did I say? Sam Bankman-Fried and CZ are going to be the Roger Ver, Craig Wright of this bear market. Okay, we're going sideways at support for months. Everybody says, oh, this is the bottom. We're carving out a bottom. Next thing you know, Craig Wright and Roger Ver fighting each other on Twitter, arguing over what's the real Bitcoin and who's the real Satoshi. And they're having jiu-jitsu matches, you know, really just an excuse for them to roll around together. And what happens next? Oh, crypto drops by 50%. What happened this time? I mean, we haven't dropped by 50% yet, but I mean, is it the exact same thing? Oh my God. History doesn't repeat itself, but it often rhymes. All the stupid fucking sayings that like actually come true in real time. You're like, oh my God, it's almost like all these old people from history knew what they were talking about. Maybe that's why they want to erase the history, so we don't learn from it. Oh, shadow banned again. All right, so gold, backtesting, support. I know everybody's getting like super excited and they're talking about gold and the bull run and the new all-time highs and all that stuff. What am I talking about? Okay, so distribution, lower high, double top, new low, check. Everything we would expect to happen, correct. Backtest of the 821 after months of selling off, check. One of two things are going to happen. We're going to reclaim this level, and then by all means, we can start talking about we're going to go to new all-time highs, and we start paying attention to 1935. We start paying attention to 1976. We start talking about all these bullish targets and all that stuff. What do I see? What does a technical analyst see? Not some FOMO little moon boy who wears his heart on his sleeve. And by boy, I mean old men that have aged 20 years in the last 3 years because they're all in on silver and gold. I mean, I see basically a loss of support, a backtest of the trend, and likely a rejection of said trend after a dead cat bounce, after a prolonged sell-off, after distribution and new lows. So we have a high, a low, a lower high, a lower low, a backtest that's probably going to result in a lower high, followed by continuation to the downside. The blue slope line has flipped and got rejected exactly like we said. It's now red. We're below the zero line. Hard sell signal. I mean, literally everything that I was warning could, would, should possibly happen, exactly like what happened in 2011, has played out perfectly. The only difference is we had this little pushback up here and everybody's excited and bullish again. Just like what happened in the stock market the last time when we got rejected. So just be careful. You know, it's one thing to be wrong about, you know, a crypto or a stock or something like that when you can easily liquidate it and you're not paying like premiums and stuff like that. But it's a whole different game when it comes to like precious metals and stuff like that. And if you're just speculating, you know, digitally, it's not that big of a deal. If you do pay premiums on the digital, it's not nearly as bad, or you recoup the majority of it when you sell again. But if you're talking about physical, if you ask me right now, hey, do you want to wait 6 months and potentially buy gold substantially higher? You know, when I say substantially higher, I mean like $100 higher, $150 or $200 higher. Do you want to do that? 10% higher gold price, but a much, much better probability that we go substantially higher and back into a bull run? Or do you want to just right now, when everything looks the worst it could possibly look, and very, very likely that we're about to get rejected and go much, much lower to new cycle lows, at least to retest those lows. But you could do it right now for the low price of $17.50 and save yourself 10%. I would much rather have a higher probability of success, because if you go to sell this gold, you're going to pay $100 and something premium per ounce or whatever, and then you go to sell it and you're going to lose that premium. So in order to sell it, if you buy it $17.50, and let's say you pay $100 premium for an ounce, you bought it $18.50, so then gold has to go all the way back to $18.50 for you to sell just to break back even. So why not? At that point in time, you're basically, I don't know. Obviously you got to do whatever you want, but for me, I would rather a higher probability of success, especially with something like gold. It's super liquid, but you pay the price for that liquidity in those premiums. And then speaking of premiums, silver premiums right now on Eagles are literally at like all-time highs. Silver dollars are selling for like, $35, $41, like $14 to like $20 premiums. So either I'm an idiot and don't get what's happening, or a bunch of other people are FOMOing in as or after the move has finished. Again, one of those two things. Completely possible that I'm an idiot, but also got a pretty good track record. So this is our macro cup and handle we've been talking about for about 50 years. Perfect bounce at 200 exponential, back test at 821 of silver on the monthly, and potential of just another lower high with another lower low, bearish control zone, all red histograms, slight little bit of green here, red slope line below zero line. I don't know, man. I don't know. So silver juniors got the majority of that little move we were talking about. Well, I shouldn't say majority. We're almost halfway there. But that push up from the lows back to roughly the 382, the 200s, etc. Could silver juniors continue to rip, and complete this trade? Sure, it's definitely possible. I mean, obviously we would want to see silver continue to create some constructive chart patterns. Same with gold as well, like silver junior, gold junior, etc. All right, so GSG doing nothing, hang out at the lows. We know basically this is support. We lose this support. There's, basically a line in the sand down here at 20. After that, we start looking for our actual targets. And you're like, that target's way too big. That's not fair. That box is half of the screen. To which I say, I'll make my box as big as I want. Wait, no. Damn it. Never mind. It's because I drew it on a longer time frame. So if you go to like the weekly, it makes more sense. LNG. So bouncing around still inside this little ascending pattern, trying to cross that 821 back to the upside. Like a little like topper looking candle right here. So we'll see what happens. Basically a little fucking low rejection, big wick, basically like no body to it, and it's red. We'll see. We'll see. Could go either way. I mean, it's still inside the range. So as long as we're in the range, I mean, it wouldn't be crazy for us to come up here, retest the top of the range again, put a new high. But eventually, I think we're coming back down here to support it. Mosaic hang out still in that sideways pattern. As long as we're above this yellow line and below the 200s, nothing to see here. Uranium going sideways, doing nothing. CCJ, same thing, below the 200s. Not looking strong, but not looking weak. Basically, just waiting for something to propel it in one direction or the other. So Tilray, so we took advantage of this little scalp action on Tilray. Congratulations to everybody else that took advantage of it. Back tested the 200 simple, hit our target perfectly. Oh my God, it's so crazy. It's almost like other people do the same thing we do. We're all just working together, but decentralized. Came back down here. It's losing the 821, lost the ascending slope line. We still have this ascending slope line in green. So we do still have a little line in the sand here, kind of squeezing into this little wedgie. If we can get above that descending resistance, Daddy's going to get a brand new pair of shoes, if you know what I'm saying. Talking about a massive potential move back up here to the 0.5. But, I mean, even the next target, 382, is like 569. So, you're talking about like 30%. Another 30%. Momentum in our favor. Looking a little tired right here. I wouldn't get too excited for a breakout, to tell you the truth. Seems more likely than not they will probably just go back to lower again until I see some kind of sign of like an actual potential bottom and building momentum to the upside. Again, I would much rather buy a large position above 491, above the 200s, have to actually building like some kind of potential positive momentum, rather than just like buy into resistance or get bullish at resistance like everybody else does. All right, so just going to revisit those Dow stocks. Nothing has really changed because obviously the last stream was on Wednesday. We had a full day on Thursday, and then, or no, we had, oh my God. We had our stream on Wednesday night after the markets closed. We had a holiday on Thursday, and then we had a half day on Friday, and then we had the weekend. So literally the only thing that has changed from when we talked about all this shit is the half day on Friday. So that being said, UNH, obviously we have this triangle. It is a bullish triangle. We have a flat resistance. We have ascending support. We're above the 200s. We're getting ready to test that resistance. And this is obviously one of the stocks that's helping to propel the Dow Jones to the upside. Good one. GS, Goldman Sachs, the Sack-a-Lack, the ball sack attack. Looks like it's getting ready to come up here like 423 and retest. Quite a bit of chop through here. But again, once we crossed the 200s to the upside, we went pretty quickly. Once we broke through that previous high, we went pretty quickly up to resistance. And the reason I'm telling you that is so that I can tell you this. Home Depot, okay, W, double bottom, broke above the 200 exponential and simple. 200 exponential is bullish, 200 simple is flat. We're at that resistance now. The measure move to the upside would likely be a retest of resistance and the previous all-time high. 27% upside. If we lose the 200s, come back down here, we lose 7%. We get back out of the trade, whatever. 3-to-1 risk reward ratio, well, 3.7, give or take. Looks pretty juicy. I'm jumping on that one myself. Obviously, we want confidence, or a little more confidence, rather. We could wait for the break, the retest. But we don't want to get hesitant on this one because it could definitely run. And, all we're looking for is to take shots at, 50% probability roughly with better risk reward. If we're going to flip a coin 1,000 times and every time we're right, we make $3.73, and every time we're wrong, we lose $1, who cares if this coin flip is heads or tails? Who cares? Because we know we got, what did I say, 1,000? We got 999 more coin flips, to even it out. So if we do this enough times, consistently, intelligently, we win. And Daddy gets his shoes. McDonald's Corp. So McDonald's looking like the opposite right here. Very strong. And now we're seeing weakness, 821 bear crossing. We did have a situation like this, push back up, and then went down. Seems likely we're going to head back down here. We do have quite a bit of support through this level. Nice little bit of chop, essentially, before that initial sell-off. We'll see what happens. McDonald's looks like it wants to sell down here. This is a very clear... I talk about this all the time. This is one of the most clear and concise rejections you could possibly have. All red histograms, break below the slope line, back test the slope line, get rejected, slope flips red, McDonald's goes to 0. Wait, no, that's not right. McDonald's goes down some, but definitely not to 0. Because obviously cheeseburgers are part of the essential diet in America, not in Russia, because they're banned. Oh shit, am I allowed to say Russia? Oh, now I'm banned. Great. So Amgen is next. So just broke out. Obviously, we talked about the potential target to the upside for the Fibonacci extension, looking at like 324, something like that. It did have a pretty aggressive move up here. Wouldn't be crazy to see it come back down, fill that gap. But we don't want to get too greedy on this thing if it drops back down a quick little 10%, because you basically broke out, back tested, and then ricocheted. So that's what you want to see. You want to buy the retest, obviously. And apparently other people use the same trading strategies we do. That's absolutely crazy. So there's a recipe to being a winner. It's not just coincidence. You don't just plug FTX and sell out all your followers. That's weird. So Microsoft is next. We already did this one. Magma. Caterpillar, again, very strong. 200 exponential, getting ready to cross above the 200 simple. Went absolutely parabolic. There's a massive gap back down here. Is this going to be a breakaway gap, or are we coming back to fill it? I don't know. Could we come back to 200? Yes, that's 20% down. That would pretty much look like a macro double top. If we held that area, though, we could still go higher, but this thing looks fucking tired right now. I'd be looking more at this little double top and like this macro, like double, triple top scenario, than I would be looking at I mean, it's still strong though. It's still really strong right now, but it looks like it wants to have a short-term pullback. But I mean, look, it's at the highs. Visa, so same way we talked about Home Depot and the potential that Home Depot had. We don't have like a clear-cut W double bottom like we do on Home Depot. But we're back above the 200 exponential. We're back above the 200 simple. They're potentially or already flipping blue. 200 exponential is about to cross above the 200 simple. By then, they'll both be blue. Be the beginning of arguably a bull market. Could it fail? Sure. Sure. I mean, we had a couple. You know, whenever the 200 exponential is on top, it looks a lot stronger. So here, this looked like there was some potential. And then we went to new lows right here. You know, pretty consistent beats on earnings. So what does that mean? Well, if we threaten this, we take this out, you know, we likely start pushing up here. We see what happens to all the ones that were in a bear market and then flip back into a bull market. The majority of them shot right back up to retest the highs. So 15% move to the upside on Visa seems likely. You know, we see what happened right here on the old Honeywell ham company. The ham manufacturers broke above the 200 exponential on simple, took out that previous swing high right there, back tested the one before that. Looks like it wants to head back up here to new all-time highs. I mean, TRV, Travelers Companies, new highs. We did get a sell by sell signal right here. This, what I would look out for on this is a push up here and bearish divergence to develop. Because on longer time frames, man, a lot of these might be about to just double top, and they're just putting in slightly higher highs to trick people to coming in. See, I would rather buy one of the ones that's just crossing bullish and try to capitalize on this move right here than try to buy these ones that are like in the process or potentially breaking out. If Deere comes back down here and closes this gap and finds support though, I mean, we talked about the potential for that pretty nice upside trade on Deere. The tractor company. Lululemon, Walmart sweatpant company. So we see the descending resistance. We break through the resistance. You know, basically took out that previous swing right there. 200 exponential is bullish. 200 simple is bullish. We just broke out a descending resistance. I mean, look, again, I'm not trying to be like overly bullish on these things, but like money has to go somewhere. We talked about a potential case where money flows into, you know, United States stock market, and like even foreigners love Walmart sweatpants. So, I mean, the possibilities are endless for Lululemon. Initial like 14% move right here with 9% if we break down below the 200s. But I mean, realistically, you know, what are you looking for? Like retest the highs or something like that? Could we get a better entry maybe and it comes back down here? A little rejection comes down. I don't know. We're above the 236 now. We took out that previous swing right here. I think it's more likely that we retest the previous high than come back down here to the lows. But you know, this is really the trade that you would want if you're a patient adult human being that's not a degenerate. 50% upside, 10% downside. Could it run away from you? Sure. If you're like a total degenerate or partially degenerate, or like maybe one of your parents was a degenerate and it's like what do they call it? It's like dominant and recessive. If you're a recessive degenerate, then you know that, and that's okay. You acknowledge it and you're fine with that. You know, you can always put a small continuation trade on and then buy on the pullback if you do get it. But that way, at least the continuation trade goes up. But, you know, we're talking about like, you know, quarter, half lots, etc. You don't want to go like jump in too heavy and then immediately pulls back to your target. And you're like, oh, great. Now I'm looking to get out of the trade at a loss instead of get into it. UUP. So this is the next potential trade setup that we were talking about, which is basically, you know, just the dollar. It's the strength in the DXY. So we're basically at the 200s. We're at the lows. Now, granted, this doesn't look exactly the same as DXY. DXY had that bullish divergence. It did already hit the 200s. Very, very close, though. So if this started to turn up right now, it would still look like bullish divergence here. Because, you know, this rolled up right there. We would have a higher low. This rolled up right there. We would have a higher low. And then basically, I mean, technically, it is a higher low. So, yeah, I mean, this chart's not nearly as clean as the actual DXY chart, but you guys get the point, obviously. So yeah, I mean, if we're going to see this little dead cat bounce on the DXY or whatever, come back up, retest some resistance, you know, we could see a quick little 5% move back to the upside, 6% move back to the upside, and then go lower, and that's fine. But that would give us the opportunity to at least buy into a lot of these stocks that are looking thick and juicy as they basically retest support and then go higher. The dollar retest support, goes higher and then goes lower. So we buy those other assets as they come down, buy the dollar as it goes up and then flip. Or maybe the whole rally fails right now. The dollar's at new all-time highs before long. All right. Nice. So that's it. We did crypto first. So, all right. I'm going to go ahead and wrap it up there. We made it to the end. Obviously, it was a very, very exciting stream. As we can see in the comment section, is blowing up. Matter of fact, if I don't get to your comment, guys, they're scrolling so fast. I probably just didn't even see it. So, try to tone it down. Maybe everybody comment like once every so often instead of just all commenting at once, because it's just insane. So that being said, we got new indicator coming down the pipe. Yeah, so that's cool. We've got Jerome Powell speaking. We got like 2 weeks, and then we see another Fed meeting and potential rate hike. Well, it's going to be a rate hike. The question is it going to be 50 or 75? We got another CPI reading coming. Lots of other important data. Yeah, I'll probably have that new indicator published in the next couple of days as well. So all your group members, whether you're active or not, whatever, you know how to get it. Just jump in, grab the link. So, but yeah, we'll go ahead and wrap it up there. So hopefully everybody had a great weekend, great holiday, etc. Enjoyed some time with their family or drinking buddies, whatever it is you do with your time. And we get back to it. Go ahead and wrap it up there. Appreciate you, J Hoff. Hell yeah, man. I'm glad you enjoyed it, brother. Doing my part. I know that's right, bro. You're making up for 2 other people, so thank you, sir. But no, that's what's up. Hopefully everybody had a good weekend. I know I did. It was nice taking the day off. And we'll be back at it on Wednesday night for our live stream, 8 p.m. Now that the indicator is basically done too, I'm going back to the static videos. I've just been working on that, and that's been taking up some of my other time. So that's going to be a nice little positive switch back to those as well. And yeah, we'll wrap it up there. It is 9:30 p.m. Eastern Standard Time on 11/27/2022. I am, of course, Crypto Trend Trader, and I'm getting the hell out of here. Everybody have a great week. I'll see you guys in the group. And obviously, remember, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, guys. Have a great night. Thank y'all for calling. Oh, shit. Damn. You know what? I probably would have seen from you already. But, Parad, if you're in the chat right now and you wanted me to look at those, I know you had a couple tickers from last stream. I'm assuming you're not here right now, or you probably would have said something already, though. So we'll get them just next time. Just let me know. So, all right, everybody have a great night, Crypto Trend Trader. I'm getting that.